Now the yen significance. Okay, let's talk about that. So a bit of a back, is when obviously I've been trading currencies. I was a full-time currency trader, all I was doing was FX from the age of 18 until really 2017, when I went full crypto. So obviously I was much more aware of the inner dynamics between each currency. But it's been a good 7 or 8 years since I've done FX, and so I am admittedly a little bit rusty. But it is worth understanding some basics about the Japanese yen and the Japanese investor, full stop. So typically, Aussie yen was always known as the canary of global risk. So what happens is that you had Japan over here. I can't draw Japan very well, but let's say that's Japan. They have been on effectively QE infinity since the 1990s because they basically died in the 1990s. So if we look at the Nikkei, here we go, and we take the weekly chart. Come on, give us an old chart, okay? And this is why sometimes you have to find one where there's been. Try that one. Here we go. So obviously, if you look at the Nikkei, so the Japanese main stock market from say 2008, it looks like it's done mega. It's up. What is that? 476%. Now remember, what do I always say? You cannot judge anything on price. You have to judge it against M2. So whilst we're here, let's look at JPM2. JPM2. So what is that? Japan Money Supply M2. So in the same sort of period from 2008, how much has that gone up? It's gone up 76%. Okay, so actually the Japanese stock market since the subprime mortgage collapse has actually done pretty damn well. But there's always a but. Has it? So as I said, in the 90s, Japan died. And there's this really good book by Richard Koo. And this guy. And it's the Holy Grail of macroeconomics. I read this book, Jesus Christ, years ago, probably 10 something years ago. And Richard Koo, this is on my shelf downstairs. He was basically saying how the US is not going to die in a mad hyperinflationary, ball of fire. It's going to just roll over in a slow, impolite whimper, just like the Japanese did, or they did a polite whimper in the 1990s. So if you go back to Japan in the leading up to this, everything was booming. The economy was booming, the stock market, house prices, the interest rates were pretty low, like unemployment was very low, as in real unemployment. Japan was like one of the model nations in the 1900s. And because Japan, it's pretty obvious when you look at it, like Japan basically dominated the electronics industry, from sort of the 70s onwards. Pretty much everything, everyone says, everything, you look at a toy, it's made in China. Well, computer games, video games, all the consoles, Sony, all these big old electronics companies, they're all Japan. So Japan literally surfed the electronics wave for the best part of 2 decades. So what happened? The average Japanese household made so much money that they didn't really know what to do with it. And in Japanese households, does anyone know who controls the money? Is it the wife or the husband? Who does the investing in a Japanese household? I'm curious to see what your answers are. What do you think, folks?
Grandmother.
Yeah, it's the female.
It's the woman.
Yeah, it's the woman. It's the female of the household that does all the bills, all of the investments, if they do investments, and the husband literally is just the workhorse. You know, go out, work, and the wife typically stayed at home and sorted all the house affairs, including investments. And I guess there's probably other countries that are very similar. But what happens when you have a few decades of booming, where the average middle class family is very rich, the high class families are uber rich, and you have all of these, you know, I'm gonna put a big black tar brush over this, stay-at-home mums with shitloads of money. Now their investment profile is very risk averse, so not many of them did much investing. What did they do? They bought into the company. When I say the company, the country, they bought Japanese debt. They're like, well, yeah, we're not going to take much of a risk. We're just going to buy, government bonds. And so what happened is that the Japanese government effectively had like this unlimited, tap of money that it could always borrow from. So then, the Japanese economy is really good. And going back to this bit here, this is where the canary of global risk came in. Because what happened is that because interest rates were pretty much zero, and this really started off in the 90s, to be honest. This really started on the downturn. So 1989, things got horrible, okay? And so from the 90s, they started cutting rates. So this is the end of the Japanese empire, effectively, of the economic empire. The bubble deflated. It didn't blow up. It just slowly deflated. And what did the Japanese government do? They cut rates. In fact, here we go. Here's the playbook. Aging population, falling economic output, lower GDP. Lower GDP meant tax hikes. More borrowing to service the debts. Yes, they did that. More borrowing means they eventually have to do rate cuts and crazy stim pumps. So very quickly, Japan found themselves bang on where the US is right now. More cowbell, blah, 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 blah. And so what happened is that they cut rates down to pretty much zero, and they were at zero for a long freaking time. So then we have the Aussie Yen carry. And so what the Aussie Yen carry was, they're like, wait a minute, rates, so investors, house mums, whatever, they're like, okay, well, we now can't buy Japanese debt anymore because the Japanese government are giving us 0%. So we're sat here on oodles of cash. What the hell are we going to do with all our money? We can't buy any debt because we're going to get, nothing. It's worthless. But just over just on the other side of the equator, there's a lovely country called Australia. Historically, what have Australian rates been? Pretty freaking high. So let's just say 4 to 5%. So all of a sudden, Japanese investors, Japanese women, were basically going, oh, wait a minute. There's a lovely risk-free or relatively risk-free trade here. We can go out and buy Australian-denominated assets, i.e. Aussie debt, Aussie bonds, Aussie whatever, land, real estate, resources, mining companies, whatever. And effectively, they would make, they would make 4 to 5%, or sophisticated investors will be like, oh, we're going to borrow from the BOJ, the Bank of Japan, at 0% or 0 to 1%, let's say, and we're going to basically, borrow that, plow it all into Australia, make 4 or 5%, and they've got basically what was a net, let's call it a net 4%. Easy money, right? But you have to understand that these Japanese investors they're like very scared, timid deer in the headlights. So anything slightly worrisome in the world, they get absolutely freaked out. So any murmurings of war anywhere, whatever, they would instantly stop borrowing, stop investing into Australia, or they try and redeem their investments. And what would happen is that when you look at the chart of Aussie Yen, in times of in prosperity, they would borrow, so the Aussie would go up. And why is that? Because freaking the whole nation of Japan is just buying up Australia. And then when there's times of pain, what happens? The Japanese house mums were going, oh, I'm scared, what do I do? They sold everything Australian and they flee to cash. So the Japanese mindset is basically flee to cash when scared. Like, it's so predictable. Now, most investors do that, but the Japanese 10x that sort of mentality. And therefore, the Aussie Yen chart became this global canary of risk, because every time there's anticipated fear or pain, or even real fear or pain, Aussie Yen would die. And when Aussie Yen started going back up, it's like, oh yeah, the coast is clear, the Japanese mums have come out to play again. That was basically the big black tar brush rule of thumb. Now, everyone with me so far about understanding the real sort of mechanics behind Japanese investors? And when I say Japanese investors, it's really mainly women and the few fat cat blokes, you know, that owned like Mitsubishi and Sony and Nintendo and all that sort of stuff. So where was I going with this? The next thing is Japanese. Oh yeah. So going back to Richard Koo, and so what he was, and he basically is saying that Japan will never really recover, and they didn't, and he was pretty much spot on, because they had what was not only a massive crash, but they had a 20-year silent crash, because look what happened. The Japanese stock market peaked in 1990, or yeah, literally 1st of Jan 1990, and died. And it's literally only just this year, early this year, hit break even. So what is that? 24 years it was underwater. So not only is it losing money from real inflation, as in the currency expansion, it just did nothing for 24 years. Japanese stock, property market is exactly the same. Now you probably think, yeah, but Siam, it wasn't that bad, because the Japanese money supply only grew by 74% from 2008 till now. But it's irrelevant. So this is where I guess Harry's question comes in. Simon, what's the relevance of dollar yen? Well, who runs the world effectively? What currency is every asset, every commodity, everything priced in? Pretty much it's the dollar. So although the Japanese monetary supply didn't really expand that much, the US monetary supply expanded like freaking crazy land. And so the Japanese were hit in so many different ways. They had the silent 24-year crash until this year, and this is just getting above break even on pure monetary, like nominal terms, not real terms. And they're, you know, the Japanese, here we go, Japan, real estate investment, real estate index. Wait, there must be a better picture than this. Japanese real estate historical chart. So the Fred. Yeah, look at this. So what this shows us is that residential property in Japan peaked in 1990, quelle surprise, or 1991, because there's always a lag, and it's still nowhere near. So when you add in US dollar expansion, even the Japanese expansion, monetary expansion, the loss in the stock market for the last 24 years, like Japan was absolutely buggered, and they've basically been in a coma for the last 24 years, economically speaking. They still haven't recovered. What about commercial? Where is the commercial? That's real estate. No. I'm sure it'll be here. Let's go back to Fred and go commercial real estate Japan. Real estate loans, commercial real estate loans, commercial real estate price. No. I guess you're just going to have to take my word for it, but excluding Tokyo, commercial real estate also dumped as well. Now, Harry, what was the exact question? So all I've done so far is give the preamble, so context. What was your dollar yen question?
I suppose it was really, I've seen a lot of people talk about it over the last couple of weeks, if not months, about the relationship between the dollar and the yen, and how that can give an overall picture of where, I suppose, the global market situation is.
Okay, this is the bit I forgot. So, the reason why people worry and care about dollar yen, or the yen, etc., is, who do you think is one of the world's biggest buyers of US debt? Japan. So, a couple of trading pubs ago, I went into depth of, what the US does, how to borrow money, or, blah, 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 blah. And they have this little lemonade stand, and it's like, buy my debt. It's a bit like what I'm trying to do with RT now. RT is like, hey, cup in hand, I'm trying to raise 500 grand for 90% of the profits until it's paid out. But what I'm trying to do is no different than what every country on the planet does, trying to sell bonds. So Japan has always been the big, as I said, they're timid deer in the headlights. So Japan will only invest in things which they deem safe and risk-free. So they'll either buy Japanese debt if rates are any good, which it normally isn't. They'll buy stuff in Australia. By the way, China bought up a lot of Australia as well. Same demographics, or same reasons really. But also Japan. Japan has been America's best friend for it seems, or ever since World War II, which is ironic. But they've stopped doing that now. Or they've dramatically stopped doing that. I don't think they've dumped any yet, but I think they've just stopped buying US debt. And that is not good for the US, which is why the US is trying to force the Basel IV directives in, which, again, I spoke about in another trading pub ago. Now, another sort of side topic, China. So, going back to Australia over here, Oz, we have massive China over here. China had an investment ban for, I don't know, hundreds of years, to the point where the Chinese public were not allowed to invest overseas. I wrote a massive article about this about 8 years ago. I'm just trying to remember, but the things I can remember from my article is that it was roughly 6 generations worth of money suddenly became unlocked. Money unlocked. And what happened is that the Chinese government, they wanted to prop up the Chinese real estate market. This is back when China was like, right, we need to build super cities, we need to build infrastructure, and they needed money for that. And they realized that the Chinese, the average middle class and wealthy family, they had loads of money, but because of the laws of what they're prohibited in doing, there were roughly 6 generations of life savings all built up. Then suddenly they could invest it. And this is why, and it was around this time, probably about 10 years ago, or 5 to 10 years, no, 7 to 15 years ago, let's say, where all of the money was unlocked. It then fueled their massive super cities, and infrastructures, and that 860-mile long aqueduct from South China to North China, and loads of other stuff. And also people going, holy shit, I can now buy stuff, not just in China. And guess what happened? A load of these families came to London and just bought London. They bought, did you know that China has a majority control of UK energy? Did anyone know that? Scary, isn't it? I remember being in the MOD, the Ministry of Defence, when this happened, and I remember, can't say too much, but I remember some of the generals on the 5th floor where I was on in Whitehall, like having a little balmy going, how the fuck did we let China control our energy? So yeah, China still owns the majority of the UK energy. So if we went to war against China, they could literally just go, oh, lights off, England, sorry. But again, the way that, if you look at how the Chinese politicians react about England, they look at us like we're ants. We are non-competitive in every single facet of geopolitics and economics. They largely don't give a shit about the UK. So a lot of this 6th gen money ended up in Australia as well. They just bought Australia. Same with the Japanese. So I think, China don't like Japan, but they looked at what Japan had been doing and gone, actually, that's a pretty good idea. Let's buy Japan. Let's buy Australia. And once there's nothing else really to buy in Australia, they went, oh, wait a minute. The biggest continent on the planet, really, for resources is Africa. And then they just bought Africa up. So, and the one thing I will give the Chinese is that a lot of people go, oh, yeah, there are countries out in Africa where they're like, holy shit, we have massive buyers from America trying to buy our natural resources, and we have China also trying to buy the same stuff. And from my limited experience in that, it makes more sense to go with the Chinese because they tend to have a bit more honor than American politics. So what the Chinese won't do is renege on contracts. Whereas what I've seen from my research back a fair while ago is that American contracts are very easily negated, reneged, and they happily go into lawfare. Because a lot of US corporates, they'll be like, okay, if we just break this contract, what's the risk-reward seesaw in fighting that in courts and blah blah blah. And if the money comes up higher in terms of if the reward is higher to break the contract and then just go to court to end up in mediation and then drag it out, they'll go for it. Whereas the Chinese, they don't renege on their contracts. So yeah, so that's one of the reasons why Africa, China has bought up more Africa than America, because they have some degree of honor. So really that's the real reason why the dollar and the yen is is somewhat important, because Japan has been one of the biggest US debt buyers, but not anymore.